Okay, so welcome, ladies and gentlemen. On behalf of my team, it is my pleasure to introduce to you our research on Wienerberger. The company is listed on Vienna Stock Exchange and is a producer of clay bricks, pipes, pavers, and roof tiles. Based on our fundamental analysis and a discounted free cash flow model, we issue a buy recommendation with a target price of 14.60 euros by the end of 2015, representing an upside potential of roughly 17%. We are bullish on the stock due to Wienerberger's strong cash flow generation in a well-diversified business model, its successfully completed restructuring program, and the solid margin improvement potential due to its low utilization rate. Furthermore, we foresee an overall positive economic outlook on most of Wienerberger's markets. To begin with, let us focus on Wienerberger's business areas. The company operates through 4 divisions: Clay Building Materials Europe, Pipes and Pavers Europe, which together add up to over 90% of total revenues, Wienerberger's North America division, and Holding and Others. With total revenues of over 2.6 billion euros, Wienerberger is the world's largest manufacturer of clay bricks, holds leading positions in the pipes business, and currently operates in over 30 countries. Wienerberger has reduced its dependence on new residential construction and aims to further expand activities in the areas of renovation and infrastructure. The acquisitions of producers of ceramic pipes, plastic pipes, and roof tiles transformed Wienerberger into an international system provider of building materials. We think that through this strategic refocusing, Wienerberger is well positioned to benefit from a future recovery in building materials and a growth in the pipes business. And now my colleague Matthias will go on with Wienerberger's most important markets.
As we can see in the graphs, both the European as well as the US residential construction market are highly correlated with GDP. Hence, a very important question arising in our analysis was how those two markets are expected to develop. In Wienerberger's principally European markets, we clearly see the positive outlooks outnumber the negative ones. Although we do not yet know whether the ECB's 1.1 trillion euros QE program will be a success, with interest rates remaining on a very low level, increasing private investments and rising consumer confidence, we expect European markets slightly to recover, with residential construction growing 2.1% in 2015. The US, being another principal market for Wienerberger, announced a total of 1.1 million housing starts in 2014, representing a year-on-year growth of 5.3% and the highest number since 2007. We expect this trend to continue, with residential construction growing another 5.7% in 2015. Looking at Wienerberger's markets on a micro level, barriers to entry seem to be high and prohibitive, with new entrants facing high capital intensity, extensive technological know-how, difficulties to receive excavation licenses, and the risk of high sunk costs. The European clay brick industry is primarily comprised of small family-owned businesses, transforming each region into a separate competitive business environment. Thanks to Wienerberger's scalability in terms of technological know-how and its strong distribution network, we believe that the firm will be able to maintain a market share of approximately 30%. A similar market profile applies to roof tiles, where Wienerberger claims a share of about 20%. Coming to the pipes market, Wienerberger possesses a share of roughly 8%. Lacking pipe facilities in the areas of freshwater and wastewater management in Central and Eastern Europe, renovation need in Western Europe, as well as a growing necessity in electricity and broadband services should lead to top-line growth in Wienerberger's pipes division.
Thank you, Matthias. Now let me continue with the most compelling financials that support our buy recommendation. First, although Wienerberger did not achieve a positive net income over the past years, since 2009, EBITDA grew annually by 6.3%. Therefore, the company has shown a strong operating performance, and for 2014, we expect a further increase in EBITDA of 19% to 318 million euros. As a result of the now completed restructuring program, EBITDA margins should increase from 10% in 2013 to 11.4% in 2014. Going forward, we expect profit margin improvement due to a higher utilization of plants. And furthermore, due to Wienerberger's high operating leverage, the company should be in a position to profit considerably from an expected uptick in the market. Second to mention is Wienerberger's strong cash flow generation ability. In 2013, for example, cash flows from operations amounted to 190 million euros, whereas only 100 million euros were spent on investment activities. One reason for that is that only a portion of depreciation needs to be spent on maintenance capex. And for the future, we expect this situation to be ongoing. Finally, let me elaborate on the company's capital structure. The company has set its upper limit at 2.5 times net debt to EBITDA. In 2014, we anticipate it to be at 1.8 times. Therefore, the company should be in a position to still add additional debt if needed, without leverage becoming a serious concern. However, we think that the company will only engage in smaller acquisitions in the future and think that the focus of the company will lay on paying down debt.
Having said all that, let me now guide you through our valuation. We used a two-stage DCF model to derive the target price of €14.60. Due to analysis, we expect new residential constructions to improve in the majority of Wienerberger markets. Together with an overall improving economy, we expect sales to grow by 5.6% annually from 2013 to 2018. As we already mentioned, we expect improving margins and low capex compared to depreciation going forward. Moreover, we assume that working capital will stay constant to sales at around 20%, and consequently, some investments into working capital will be needed. We also expect some other cash outflows, which are mainly related to decreasing pension liabilities. We also used multiples to value Wienerberger, but we see a number of issues associated with that approach, and therefore we didn't use it for our target price. However, we still think that it is a very useful approach to validate results derived by DCF. We deem the most appropriate multiple to be EV/EBITDA. Using 2015 expected EBITDA yields a share price of around 16 euros. As of end of January, Wienerberger was trading at around 8 times EBITDA, which represents a roughly 14% discount versus peers. In late 2014, Heidelberg sold its brick business for 14 times EBITDA, and CRH sold its brick assets for more than 13 times EBITDA. As a result, trading multiples and current transaction multiples give us confidence in our buy rating.
Let's now focus on the risks that could affect our target price. We classified the risks on the basis of the likelihood and their impact on our estimates. And I would now like to focus on risks that have medium to severe impact on Wienerberger's share price. Now looking at market risks, the company faces pressure on its prices in Eastern Europe and the US, as well as the threat of substitute products. What is more, a weaker recovery of the group's key markets as a result of slower than anticipated GDP growth would hurt Wienerberger's top line. Additionally, a lesser than anticipated impact of the ECB's QE on new bank lending, resulting in slower than anticipated new residential construction growth, would hurt especially building material suppliers. Furthermore, our valuation faces the risk of an overestimation of the group's cash flow generation potential. The main risk factors of our valuation are the terminal growth rate and the weighted average cost of capitals. Ladies and gentlemen, with our valuation of 14.60 euros offering a roughly 17% upside, we issue a buy rating. This recommendation is based on Wienerberger's recent restructuring towards the renovation and infrastructure market, its broad geographical diversification, and a solid margin improvement potential, as well as a strong track record of cash flow generation. As you can see, the closing price at the end of March 27th, which stood at 14.65 euros, confirms our positive expectations for the company. This is the end of our presentation, and we are very happy to take any questions that you may have. Thank you.